Welcome to the Daily Business and Finance Show. NVIDIA, AMD, ASML brace for long-term effects of U.S.-China regulations. Bitcoin ATMs decline to two-year low. Boston Sci, Stryker, Dexcom, Shockwave top BoA's Medtech picks. REITs fall as earnings season begins on mixed note. Crude oil posts modest weekly gain amid Middle East tensions. Financial stocks slide with surge in long-end treasury yields. Food and beverage stocks shine amid interest rate and GLP-1 anxiety. Clothing and fashion industries poised to benefit from generative AI UBS. Stay tuned after the short ad break to delve deeper into these headlines. The recent U.S. regulations regarding chip exports to China are not expected to immediately affect companies like NVIDIA and AMD. However, there could be long-term implications as these updated rules aim to close loopholes and previous restrictions. Both NVIDIA and ASML have stated that the impact in the short term will be minimal, but it is worth noting that China represents a significant portion of their data center sales. Analysts predict that certain companies may encounter difficulties due to these stricter measures, potentially resulting in decreased revenue and affecting investment. The U.S. government's objective is to find a balance between allowing sales while safeguarding its interests, all while avoiding hindering the growth of multinational corporations operating in China.
The number of Bitcoin ATMs worldwide has reached its lowest level since 2021, as reported by AltIndex. These ATMs, also known as BTMs, enable customers to purchase and sell Bitcoin using cash or a debit card. The decrease in installations is attributed to market volatility and concerns regarding potential illicit activities. The United States experienced the largest decline in BTM installations, while Europe has a significantly lower number of machines. Interestingly, despite the higher cryptocurrency prices this year, BTM installations have decreased. Bitcoin Depot's stock has plummeted by 73% year-to-date but is still considered a buy by B. Riley analyst Hal Goetsch.
Bank of America Securities has identified its top picks for the medical technology sector in 2024. These picks include Boston Scientific, Stryker, Intuitive Surgical, Dexcom, and Shockwave Medical. Bank of America believes that these companies are high quality and profitable with strong earnings growth potential. The bank also notes that investors are favoring companies that are currently making profits rather than discounting future earnings due to uncertainties surrounding GLP-1 drugs' impact on the sector. BofA maintains buy ratings on Abbott and Becton Dickinson as well.
REITs, also known as real estate investment trusts, faced a decline in the previous week due to a combination of mixed earnings reports and broader market factors. The FTSE Nareit All Equity REITs Index experienced a drop of 3.88%, while the Dow Jones Equity All REIT Total Return Index fell by 3.85%. In addition, the S&P 500 saw a decline of 2.39%. Several factors contributed to this market turbulence, including geopolitical concerns and comments made by Federal Reserve Chair Jerome Powell. These factors had an impact on REITs as a subsector. Notably, major companies within the sector reported disappointing earnings results. Equity Lifestyle Properties and Crown Castle were among those that fell short of expectations. Despite beating expectations, SL Green Realty witnessed a decrease in its stock price due to a reduction in future earnings guidance. The industrial and self-storage subsectors were particularly affected by these developments, experiencing declines of 6.17% and 7.1% respectively over the course of the week.
Crude oil futures experienced a second consecutive week of growth, driven by concerns surrounding the conflict in the Middle East. However, prices saw a slight decline on Friday following U.S. efforts to postpone Israel's invasion of Gaza. The market risk was also reduced as Hamas released 2 U.S. hostages. Although there has been no immediate impact on oil supply, the tense geopolitical situation in the region has led to a risk premium. Amidst a week of stock market losses, energy stocks stood out as one of the few sectors that gained momentum.
In the latest financial update, there has been significant movement in long-end Treasury yields. The 10-year yield closed at 4.94%, experiencing a notable increase from last week's rate of 4.61%. As a result, financial stocks faced downward pressure, leading to a 3% drop in the Financial Select Sector SPDR ETF. Several companies experienced losses due to these circumstances. Chifu Technology, Zions Bank Corporation, Lufax Holding, and Regions Financial were among the notable losers during this period. Conversely, some companies managed to achieve gains despite the overall market conditions. New Holding, Nasdaq, F&G Annuities, Allstate, and First Cash Holdings emerged as top gainers for the week. Their ability to navigate through the challenging environment allowed them to outperform others in terms of stock performance. This concludes our summary of this week's financial news highlights without any repetition or unnecessary introductions or salutations.
The food and beverage sector is currently in its earnings season, as TD Cowen highlights key themes for investors. Share prices have experienced a sharp pullback due to rising bond yields and concerns about the long-term impact of GLP-1 weight loss drugs. Despite this, U.S. food price-to-earnings ratios are now 23% below their 20-year average, while beverage stocks remain steady. Cowen advises caution when it comes to companies heavily reliant on low-income consumers and private label products. For those seeking high-conviction outperform-rated stocks, Cowen recommends considering Mondelez International, Freshpet, Celsius Holdings, and MGP Ingredients. RBC Capital also believes that the bear thesis surrounding GLP-1 drugs has been exaggerated. In terms of upcoming events to watch closely, Coca-Cola's earnings call is particularly significant as it may provide insights into the consumer environment and potential impacts from GLP-1 drugs.
Artificial intelligence technology, specifically generative AI, has the potential to greatly benefit Softline's retail businesses, as stated by UBS. During a conference held in New York City, experts emphasized that generative AI can play a crucial role in enhancing various aspects of fashion companies, including sales, customer experience, product development, and marketing. UBS further highlighted how this technology is already being utilized by companies to create personalized messages for customers and improve the online checkout process. Notably, Ralph Lauren and Revolve Group were mentioned as apparel retailers poised to reap the advantages of generative AI. UBS strongly advised investors to pay attention to this emerging trend in order to identify successful companies within the industry.
Thank you for joining us on today's episode of the Daily Business and Finance Show. Stay tuned for more insightful discussions on the latest trends and updates in the world of business. I'm Montgomery Jones.
And I'm Amalia Dupre. Let's part ways for now, until tomorrow arrives. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.